The New Zealand versus US dollar is trading above and below its 200-day moving average and trading this week. Both yesterday and today, that price action has seen buyers try to move above it, sellers try to move below it, but each of them not getting very far. I'll talk about the technicals and the implications of that in this video, so let's get started. Looking at the 4-hour chart, last week's move to the upside after the FOMC rate decision took the price above a key target, which includes a 61.8% retracement of the move down from the second half of July high to the low price that we saw in August. That 61 came in at 0.5997. It also moved above this high price going back to the beginning of August, and the inability to stay above that level sent the price lower. We broke back below the 100-day moving average. We broke below the 100 and 200 bar moving average on the 4-hour chart. And we also dipped briefly at near the close on Friday below the 200-day moving average. So that 200-day moving average has continued to see price action above and below it in trading this week. Both on Monday and Tuesday, we've traded around that moving average level. And what is it indicative of? Well, it's indicative of a market that is taking a breather. It doesn't know what way it wants to go. It's come up short of other potential swing low levels, including this low right here from 3 or so weeks ago at 0.5830, and then the low price from about 4 weeks ago down here near the 0.5811 level, and finally the low price for the month of August, which came in at 0.57989. All those levels are targets on the downside if the price can gain momentum in that direction, but so far we've just seen the price trade higher and lower around the 200-day moving average, and for the most part try to hold support against the low of this swing area. The swing area goes back in time to these different swing lows, which formed a floor before moving to the upside, came back down to the floor right here before moving to the upside, fell below the level and traded above and below it over the last 4 or 5 or so trading weeks, indicative of a more bearish bias for the pair, but still the momentum cannot be sustained below those levels. So a breather is what the market's taking right now. We'll see if Fed Chair Powell's comments will help to either push the price higher or lower, depending upon the dollar's overall sentiment. But right now, the market is just saying, let's take a break. We'll see what happens and look for momentum in one way or the other away from the 200-day moving average. So that's my technical look at the New Zealand versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.